Okay, everybody, it is me, Gregory Mannarino. This is my post-market wrap-up. Just lovely. I love this part. On this Thursday, May 26th, 2022. So, what did you think? So many things are going on right now. It's interesting to follow, honestly. Let's start off with the market. So, a very nice rally yet again in this market here, especially the NASDAQ. To me, just looking at what's happening here, and I've been covering this lately, the tech sector is so massively oversold at this time. The deals that are to be made are frankly incredible. And I think there's going to be a ton of cash to be made in tech, a ton of cash to be made in the banks. You're watching the financial sector. I explained to all of you, we needed the banks to play. I said several days ago, it looks like the banks want to play after being pummeled for quite a while. I mean, again, massively oversold in my opinion, and I think this has legs. I really do. Again, I hate calling tops. I hate calling bottoms. But the fact of the matter is, it looks like a capitulation here in the market, and I would not be surprised to see this market rip higher in the short term. And I still stand behind this. Record highs this year, a very high possibility, probably sooner than most people think. That's really the truth. You just got to pay attention to the dynamics. Ignore the bullshit. Ignore the horse shit, cat shit, all that stuff. It's been pretty obvious to me for quite a while that this would turn around. This has not been a crash. Again, there's a lot of YouTubers out here selling you the lie. This is a crash. Run for the hills. These same people have kept a lot of you out of this market for many, many years. You missed out on the largest bull run in history. It's these same people right now saying that the market is crashing, and they are 100% wrong. They don't understand the market. Some of them admit they're not even in the market. So if they're not in it and they don't understand it, what makes these people experts in calling market crashes? Can you maybe educate me a little bit? They're wrong here too. I've been telling you that. I have never wavered. This little route, this several month route that we have been in after a market that has gone straight up for years, really, honestly, you don't think this is normal? It is normal. It's 100% normal. Now, let's look over at the debt market today. So yes, nice gains here in the stock market. The 10-year yield, people, nudged higher. Could you only imagine what would have happened if that 10-year yield went even higher than today? Watch how this unfolds, okay? It's a very simple concept to understand, but it just doesn't seem to get through to some people. So let's outline this very quickly yet again. When the 10-year yield rises, that means cash is coming out of the debt market. Understanding the current environment, where do you think cash leaving the debt market is going to go? Ding, ding, ding. The stock market. If you see the 10-year yield dropping, that means cash is going into the debt market, and you will see stocks fall. As far as I'm concerned, this has been a major safety trade and a fear trade for quite a while. And also, in my opinion, if the banks continue to play, if the tech sector starts to play, and that 10-year yield rises, this market is going to surge higher, fast. Again, panic buying. No one wants to miss out. So there's just no doubt in my mind that you're going to see this. The shorts are getting destroyed as of late. They're over here, rah, rah, rah. Oh, we're making all this money shorting the market. They probably gave it all back in just a couple of days here. And this, in my opinion, looks like it has legs. What we're seeing here has legs, meaning the market looks like it's going to put on further gains in the short run. Could be dramatic. So again, we've never deviated from our strategy. Some of our positions have done incredibly well. Yes, let's touch on the banks. They have done incredibly miserably for quite a while. But if you're like me, you've been looking at opportunities to buy more here. I sincerely believe JP Morgan, Bank of America, Goldman Sachs are going to make a stunning rebound here moving forward, and we're going to make a lot of money. With regard to our oil and gas producers, I mean, they've done incredible here. Commodity ETF, PDBC, IBM, others. It's all on my website for you, traderschoice.net. So continue to look for opportunity. There are deals to be made like I have been explaining to you. Also, take advantage of the dip here. Any dip that comes along with regard to precious metals. I don't care how many of you continue to tell me I'm wrong on precious metals. Good. You are certainly allowed to have your opinion. It seems like there's a lot of haters here with regard to gold and silver. Tell me where else you want to be. What do you want to do? Do you really understand the environment we are in? It's a hyper bubble in debt. If you are not on the opposite side of that trade, when this implosion occurs, you are going to lose. You must be on the opposite side of that trade. And that also involves, to me, my opinion, you're entitled to yours, cryptos. Some cryptos need to be in your portfolio. If you want to pick one, like I said, pick the mommy of them all. And that is Bitcoin, okay? That's it. I don't trade this stuff. You know that. I haven't actually bought a cryptocurrency in quite a while, but I've been buying Bitcoin since like 3,000. So anyway, with that said, let us move forward with regard to the market today. So talking about cryptocurrencies, we're doing all right. We're sitting here at 29,000 still, very tight range with regard to Bitcoin, the mommy. Gold and silver turned around, put on some gains today as well. Dollar weaker, the comparative strength, relative strength, however you want to think about it, of the dollar weaker, and 5 freaking weeks of gains for WTI. I'm talking about WTI crude, and that is just out of control, and it's going much, much higher in my view. It's due for a pullback. Are we going to get one? I have no idea. I hate to say due. I hate to say anything is due for anything, but 5 weeks of gains, that's really a little bit over the top. Anyway, you know my take on crude, and they're going to keep propping it up here. And as crude continues to march higher, you're going to see financials and banks do a lot better moving forward. It's just, look, all this stuff, just the way it is, the market, you're in these assets and they're kind of fluctuating down here. Other ones are high. You got to be spread out. It cushions your portfolio, and you just sit there and you look for opportunity, people. And again, it's not just in the stock market. You got to be looking at, again, precious metals, number one, in my view, to bet against the debt. Become your own central bank. I can't say this enough. And I also believe cryptocurrency is a way to take advantage of that, because I sincerely believe, and I won't ever waver from this. Nothing will change my mind. The inevitable implosion in the debt market is going to happen. And when that implodes, the pressure that is going to be put on the stock market is going to be epic. Absolutely epic. Cash is going to bleed out of the debt market, bleed out of the stock market, and it doesn't grow money wings and cash wings and fly away. It's going to go into other assets. That's all it's going to do. Risk on, risk off. That's the way markets function here. But we are very far away from an implosion here, in my view. Central banks continue to inflate via any mechanism necessary, and they will never stop. The central bank's power, people, you know this, I'll repeat myself again, resides in one thing and one thing only: their ability to issue debt. That's all they do. They manipulate debt, they issue debt. You want to bring down the Federal Reserve? See, I'm pointing at my hat. We could do it in a nanosecond. Just prevent them from issuing one single dollar of more debt. Dollars are units of debt. Unbacked liabilities being dispersed by public enemy number one. Developed nations around the world are broke. They're destitute, slaves to their central banks, and these central banks here are going out of their way to keep the global economy free falling. That's how they gain control. And they're going to buy it all, just like they've been doing for many, many years, in their goal to take over, in their goal to eliminate an entire class of people. And you know what I'm talking about, because I cover this all the time to the point of nauseum. Anyway, here's a piece of economic news that pending home sales plunge, but the prices continue to skyrocket. It's completely out of control. It really, really is. I really want you people, those of you that follow this blog, I want to make all of you experts on this market and how to read it. That's the key. All right. Number one, push all the bullshit aside. Okay. You understand that the driver of this market is the debt market. And understanding that the stock market will not, it can waver around, it can certainly drop substantially, but it will not crash again until we get the debt market meltdown. And that's going to be a crash of epic proportions. You know my take on it. An 80% sell-off with regard to the S&P 500 is a definite possibility. But by watching the debt market, look, let me bring something else to your attention in case you don't know. I created something called the MMRI, Mannarino Market Risk Indicator, which is not a crash indicator, okay? It measures risk in the stock market by looking at its driver, and that is the debt market. And you know this to be true. Nobody knows that better than you do. It's free to anybody. It's right on my website, traderschoice.net. I myself look at the MMRI 2-3 times a day, every freaking day. It has not been wrong once since it's been up. Not one time has the MMRI been wrong. And in order to understand the MMRI, you have to look at it a lot over a period of time and then watch how the stock market responds. Once you get that relationship, it's just going to click, you'll be clear on it. It's the best risk indicator for the market that has ever been created, ever in the history of the world. Yes, I am the creator. I'm not tooting my own horn here, but this thing works. Pay attention to the MMRI. Again, traderschoice.net. There is a link in the description of this video right at the top of the second page, and just start watching it. Watch the stock market, the relationship to the 10-year yield. That's all you need to do. And basically, you're going to know more than these stupid morons who are running Wall Street hedge funds who decide to go short the market at the moment it turns around. Imagine Greg Mannarino's shock there. I told you that was going to be a big tell, and look what happened here. Once you start getting into that business of getting fancy with your trading, that's when you're going to lose. Try to keep it simple, okay? Keep it all simple. And that's what I do here, is I try to break this down. I want everyone to understand the market. It's not hard to do. It's really not, if you just look at a couple of dynamics. Number one being that 10-year yield. The MMRI is a huge part of this here, understanding the relationship with the crude oil being the lifeblood of the market, the lifeblood of the military-industrial complex, the comparative strength of the dollar. There's not too many things to look at. And once you get this together in your head, it's all just going to go click, 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 click. And that does not mean that every single call you make is going to be correct. But overall, over time, you're going to see how right you were in the amount of zeros in your bank account. It's the truth. It's just, look, we're going to all win. We can't lose if we stay focused, if we understand what's going on. We ignore the trolls, ignore the dog shit, ignore the moron, sub-moron YouTube channels who have never been right, ever. Some of these people have been out here for years, week after week, month after month, calling for a crash, and they've been wrong 100% of the time. 100%. And this is no crash. Be ready for this market to make a pretty substantial turnaround, in my view. We just need the banks to play. We need tech to play. Looks like they want to play. Okay, let them play. We need to see that 10-year yield come higher in this environment. And I've explained to people repeatedly, they don't get it. With the Federal Reserve now in the process of increasing the federal funds rate. The market's adjusting to that. It's pricing it in. So we need to see, and I'm going to tell you once again, once that 10-year yield settles above 3% yet again, all that cash, think about it. Right now, 2.76 or so. In order for the 10-year yield to get above 3, a lot of cash has to leave the debt market. Where is it going to go? It's going to go into the stock market. Boom! There you go. It should be a very simple concept to understand. Okay? That's it, people. Kind of a long video. I covered a lot of stuff with you. Please, I want to, for those of you that made me new here, did you learn something from this video? Can you take something away from it? All right. I repeat things a lot because people need to hear things a lot. Okay. Some people they don't learn at the same pace, and there's nothing wrong with that. Sometimes a concept that is, where do you learn this stuff? You think you're going to learn this stuff even at Harvard Business School? How about no? This is stuff you learn by doing, by being out here in the trenches. That's the truth. Okay. You don't learn this stuff anywhere, and no one's going to tell you this. You learn this stuff, if you're lucky, to find someone that'll teach it to you. No one taught this stuff to me. I learned this the hard way by getting my ass handed to me and realizing what I shouldn't be doing. And again, am I right all the time? No. Nobody's right all the time. It's an impossibility. And you will learn from every single mistake you make. That's the truth. So embrace these things. If you make a bad call on something, that's okay. You should say, you know what? I'm all right with that because I learned something, and that's worth something. Learning, you want to go to school, it's going to cost you, all right? And this market is, you're never going to be able to know everything. Nobody can. And it's the complex thing about the market really is that dynamics are constantly changing. They really are. And that is the key, is trying to put this together, remain steadfast, unless something really dramatically changes. If you've noticed, I've never changed. I've never changed my stance. I've been absolutely steadfast throughout this whole route because I have not seen a single material change in the environment. I really haven't. We know the goal. Central banks are going to continue to inflate, and that's going to continue to propel this market. The bullshit, lies, propaganda, that's going to continue as well. Take advantage of all this stuff. All of it. Don't let a damn thing pass you by. It's the truth. It's us against them, and we're going to win. I'm telling you right now. All right, look, again, I got to end this video. It's getting kind of long. Please share it. I want to hear from you. Pick one thing, and I'm going to read the comments. One thing that you may have learned that you never heard before. I can't tell you how many people write to me who say, Greg, I went to XYZ business school. I never learned this stuff. It's amazing the way you put it. And, like I said, you can't learn this stuff. This is just from being out here and doing and just trying to understand this whole thing. All right, I'm out of here. Love you a lot. Please comment. See you in the morning, and it's going to be perfect.